Yeah, and what I want to do today, folks, is just really it's going to be kind of fast moving. I know we've been on here about an hour and a half, and if you're like me, attention deficit starts to kick in at some point. So I'm going to kind of keep it kind of moving along here, and then if there's any follow-up questions, just reach out to me. I'd be happy to kind of go into a little more depth in terms of what we do and maybe how we could even help some of your clients, and maybe in some cases maybe help your business. But what I'll do is I'm going to go through a brief discussion about our business. Then I'll talk a minute. We have, if there's any Q&As about anything relating just to the market, kind of where we're investing these days, some things that we're looking at and talking to our clients about. And then at the end, I've arranged to have a gift for you guys, for Jim to hand out to you all that hopefully you'll find some value in, relating just to some consumer views post-corona. So just kind of talking, our background. Leslie Hatfield, who is my partner in our business, but also my partner in life, is not on the call today, but she's involved in a lot of our business development. A lot of y'all have known and met Leslie in the past. She pretty much handles a lot of the outside business development piece. I'm working more with our clients in-house. One thing I think that's kind of interesting, and this was something that when I got into this business, I wasn't aware of, and I thought it was kind of an interesting thing, is that not all financial advisors are created equal. And I'm sure everybody on this call has a financial advisor, probably, and hopefully somebody that you trust and love and who loves and cares for you. But there's a lot of different types of advisors out there. There's people who work for insurance companies. There's people who are more stock pickers and stock professionals. There's fiduciaries out there. We kind of fall into this category at the bottom, where we believe first and foremost financial advice needs to start with a financial plan. So we spend a lot of time talking with our clients around their long-term goals and needs. Then we build a financial plan. And then again, unlike a lot of folks who are in our industry who are really I would say kind of focused on performance, what we kind of tend to focus a little more on is how low amount of risk can we take our clients and still meet their goals. That served us really well over the last few months, where the market's down maybe around 12% or so. Our clients average are anywhere between, actually I have some clients that are positive right now in this market. Probably our most aggressive portfolios are down around 9%, 8 to 9%. So, but we do that through a large diversification of investments. We're not focused solely in one area. And again, not everything works in tandem with one another. Some things go up, some things go down. And that's why we found this to be very useful to be diversified during this critical time. We're fee-based. We act as fiduciaries for our clients, meaning legally we have to put our clients' interest ahead of our own. Unfortunately, and again, something I discovered in this business was that not everybody's is in that same boat. So there's a suitability standard and a fiduciary standard that our industry calls for, and we fall into the fiduciary role. As far as what we kind of believe in, I've kind of talked a little bit about this, is basically saying, looking at money as a tool and a vehicle to achieve the goals that you want to, and not just as an investment item. And because we believe that you should use your investments and your net worth in the way that you most want to do it, that's why we spend a lot of time on the front end discussing financial planning. That's why we go through and review the financial plan every year. We reach out once a quarter to our clients to discuss with them any life changes that are occurring. And we found that our clients really like that. Not everybody takes us up on the quarterlies, but like in a case like in the world that we're in right now, I've probably talked to all of our clients at least twice, and it typically takes me about 2 weeks to get through my entire client base. but we've been on the phone a lot talking with folks. And really this environment right now, people are less worried about investment returns. They're more worried about safety. They're concerned about, their own health, their family's health. It reminds me a little bit of investing after 9/11, because we were all worried about our family and our own well-being, as well as what was going on in the marketplace. This is going to be kind of an extended example of that, I think. And so we're just trying to, be there for our clients from the standpoint of having conversations with them and talking about a lot of different things that they're concerned with. I mentioned it earlier that we focus on clients who find themselves in a position of sudden income, and that can be from and think about it, you're the people that in the context of they've experienced a loss of a loved one, maybe they've gone through a divorce, they've changed jobs, or maybe been let go of a job. All of that creates money in motion. And typically that is a great time to be looking at doing financial planning. I do a lot of pro bono work for folks with the idea that maybe we're not the best fit for them, or maybe they're not the best fit for us, but I still believe that we need to be giving back, especially during this time. So we're doing a lot of conversations of consulting and doing some financial planning for people, even though we know we're not really going to ultimately probably work together long term. But for the folks that we do believe we can have a good fit with one another, it's typically the people that have had one of those kind of life events that I have listed there on the screen. As far as our investment strategy, I had a financial advisor that focused primarily on institutional investing for me, and so I've carried a lot of that same kind of approach to investing to my clients, even though most of my clients aren't at a level of really fitting a quote unquote traditional institutional investor. But again, what we want to do is we want to focus on diversification, risk management, and trying to take emotions out of an investment strategy as much as we can.
I'm sitting on a conference call, so I gotta.
We talk a little bit about the financial plan, and this is an example. This is one of the output pages that we talk about. Our goals are to say, if we can meet all of your goals as successfully as possible, we want to have at least an 80 to 90% likelihood that the money will meet your goals, or will go toward maybe a post-life goal, such as generational planning for your family, your grandkids, that type of thing. And so we have outputs that kind of give us visually how well we think the financial plan will go based on investment strategies and spending habits of our clients. We're going to just kind of move along here. One of the things that I do think is pretty interesting is focusing not just on a return on investment, which is what we all in our industry kind of focus on, but also a return on life. And by that, I mean, how is your money serving you and having the best life possible? So we have a program called Return on Life that is free to anyone who wants to experience it. It's a link that you can go in, answer a number of questions, and it generates basically a quality of life index that we can provide and give you an assessment on. It takes a look at a lot of different aspects of your life. I'm seeing scores, not surprisingly, dropping a little bit right now from maybe baseline numbers from 6 months or a year ago. But we also tend to kind of think about this more in a long-term kind of view of if this is not where you want to be right now, what do we need to do to kind of help you get toward the goals that you've expressed are the most important to you. Another piece that I think a lot of our clients really like to see is our financial lifeline. And this gives you a visual aspect of what your life looks like in terms of specific goals by age. So you can see that there's different age points you can be talking about. In my case, I've got my last boy will be out of school in about 5 years. At that point in time, we're kind of reevaluating a little bit whether or not we want to live part-time or full-time in Atlanta versus maybe out west someplace. Still working in the business probably the rest of my life, as long as I'm making some sort of sense to my clients. But so my retirement plan is really not to retire, but everybody's situation is a little bit different. And this gives you kind of a visual track to see exactly what you're saying is important to you. So a couple of things to think about when we talk to people about hiring a financial advisor. My recommendation, the first thing I always say to people is ask them how they get paid, because I think that's going to lead you down the road of understanding kind of where their focus and attention is. My recommendation is focus on these things: fiduciary, make sure they do put your interests ahead of their own. Make sure that they're objective and they're transparent in terms of their costs, fees, and their process. Make sure that they're competent, that they're well educated, they're up to date on what's going on and the changes that are occurring in the laws. That they have experience. In my case, I've got about 15 years of financial planning experience, but then I have quite a number of years in business leadership. Took a company public, as I mentioned earlier, and so I think my background is a little bit unique and kind of gives a different perspective to different types of folks. The last two things I think are really important because, as we tell our folks, if we do this right, this building a relationship with you, it should last a lifetime. And so you need to make sure that the relationship's enjoyable as well as beneficial and valuable to you. The last thing's kind of an obvious one, but a lot of people don't think about it, is do a background check on anyone that you're looking to work with. Make sure that they have a clean record with FINRA and that you're not getting in with some bad actors. In kind of winding up how we go about doing it, our process is kind of it's sort of a non-negotiable process that we go through, where we spend some time on the phone, then we get a chance to meet with our client, our prospects. We do the discovery consultation, which kind of gives us an idea of what you're looking for in terms of your long-term plan. We build a plan, and then we implement the plan based on your long-term goals that you've stated to us. We go through a process. It's a 100-point planning checklist that we go through with all of our clients to address these things. Now, not everybody's interested or even needs all of these things, but at least we touched on them. And then to the extent that they are relevant, we follow up and follow through on those as well. These are the kind of the primary areas that we do focus on. But as I tell people, we can't be good at everything. No one can be. And so what we tend to kind of focus on primarily is retirement planning and investment planning. We believe that we're really good at those two areas. Outside of that, the estate planning, the risk management component, cash flow and tax pieces, these are all things that we typically partner with different professionals in the Atlanta area primarily to kind of help our clients to the extent that they're needing that. So that's just a real quick overview of our practice, and I think the areas that we tend to kind of want to focus on for our clients. And Jim, I don't know if you have any questions or anything. If not, we can talk a minute about the market if you'd like.
Yeah, we've got 15 minutes left. Great job, Kevin. So if anybody's got any questions, and certainly the direction of the economy and the market as you see it, Kevin, would be really insightful. So
the market in general, I mean, as I said to you before, I mean, we tend to kind of be a very diversified investor in a lot of different things. We also believe in investing in in money managers, mutual funds, ETFs that are very low cost, very tax efficient, typically institutional level investors that I've got one of my biggest people that I work with has experience working with, like the Duke Endowment, as well as some area, the CalPERS out in California. And so, we're able to bring that high level strategic management of funds to our individual clients. And typically they wouldn't have access to those simply because of the amount of money that's required to work with those types of people. So I think that's kind of a key value proposition that we bring through my relationships that I have.